So far, we have completed different chapters for 11th, 12th, and now CA Foundation students. What are those chapters? We have completed journals. We have completed ledger. We have completed trial balance along with the ledger. And we also completed subsidiary books, right? Then we got into rectification of errors. The rectification of errors chapter is also completed. So far we have completed 5 chapters. I hope you guys are able to make use of these lectures and able to go through the videos. And if you have any doubts, as I always say, please start commenting on my video so that I can clarify your doubts. So after completing these 5 chapters, what is our next topic? What should be our next topic? Our next topic is going to be on bank reconciliation. So we are going to start bank reconciliation today. Before getting into the chapter, I will give you an introduction about how banks will operate, what kind of income they get, how do they, what type of accounts we can open with the bankers, right? And what do you mean by passbook? What do you mean by cash book? What do you mean by reconciliation date? We are going to learn all these things. I'll try my level best to cover as many topics as possible today. If not, as usual, different parts I'm going to show, and all those parts will be kept in a separate playlist. You can go through that bank reconciliation playlist and you could see part 1, part 2, part 3, different videos are being uploaded. Are you ready for this? Are you ready to learn the bank reconciliation topic? Hi, my name is Krishna Akumalla. Welcome back to my YouTube channel. This is the time for you to learn the bank reconciliation. I'll try my level best to simplify the chapter, simplify to explain how to prepare the reconciliations. And I sincerely request all of you to watch all the videos. And if you like the content, like the video, subscribe to my channel, share this video with your friends and colleagues. The most important thing is you need to watch this video, any video for that matter, watch these videos till the end. Hardly 20-25 minutes. You can easily spend 20-25 minutes for learning something, right? At least that investment we have to make. 25 to 30 minutes if you don't spend for learning something, when are you going to spend? When are you going to learn something? So it is always better you to invest some 30 minutes while going through this video, all these videos basically. You will definitely gain some interesting content in that which is useful for your career growth and which is useful for your 11th, 12th CA foundation and BCom examinations as well. Without wasting much time, let us get into the topic. Okay, guys, let us get into the topic of bank reconciliation. What is bank reconciliation? We will talk later. First, we need to understand how banks will operate. Why we need to open an account with the bank. These things first we will learn. How banks will operate. What banks does is they will ask customers to deposit the amounts in the bank. So they expect customers to pay deposits. What do you mean by deposit? Customers will have their, we are all customers basically, right? We will have some surplus amount. For example, if my salary is 50,000 and my expenses are 40,000 and I'm left with 10,000 surplus amount. This surplus amount, what I generally do, I'll try to deposit in the bank. Why? Because I get some benefit, some interest, right? So what banks does is, banks will attract customers, request customers to pay deposits. So we will pay deposits to the bank. What bankers will do after taking this, these deposits? If banks simply request and say, guys, can you please pay some deposits? Would you be interested to pay? You would be interested to pay only when there is a benefit for you, right? What is that benefit bank is going to give? When I deposit, banks will pay interest for me. Banks will pay interest for me. So they will pay interest and we deposit on whatever deposits we made into the bank, right? So then what is the benefit for the bank? Banker is taking the deposits and paying interest. What is the benefit for banks? The benefit for the banks is whatever amount they collect from the customers, they will lend them to the customers again. They will lend them to the customers. Lend them, they will give loans. What type of loans they give? They give home loans. Let me write here. Home loans. They will give car loans. They will give scooter loans. They'll give personal loans. They'll give credit card loans. So there are many loans available. Even they will, take the gold and we can go and pledge the gold and take some loans. So there are many loan facilities provided by the bankers to the customers. So what they will do, once they provide the loan facility to the customers, what they will do is they will charge interest on that. From customers, they are taking the deposit and paying some interest. And they are, whatever deposits they are collecting from the customers, those amounts are being, given to the customers again as loans. So our amount is being taken by the bankers and given to us in by way of loans. What are those loans? Different loans: home loans, car loans, scooter loans, personal loans. So many loans they provide. But what is the benefit for banker here? What banker does? They will pay less interest for us. They'll pay less interest for us, and they will charge higher interest from the customers. They will charge higher interest from the customers for the loans given to them. Oh, net, what is the benefit for the bank? They will collect the deposits from us and pay lesser interest, and they will give the same deposit amount to other customers who are in need of loans, and they will charge higher rate of interest. So the difference between the interest they collect from the loans and the interest they give it to the customers on deposits, the difference amount is the income for the bank. That is called net interest. Net interest income. What is that net interest income? Whatever interest they are collecting from the customers against the loans given minus whatever amount, interest amount paid to the customers on their deposits is equal to net interest. That is the profit for them. That is the profit for them. So these banks will operate purely based on their net interest, and there are some other services also they will provide. So you need to briefly understand, banks will collect the deposits and those deposits will be given to the customers in terms of loans. Are you clear so far? Now, what will happen? After, this is one model. The other model is, what are the other services they provide? They will also distribute mutual funds. They will also distribute mutual funds. What is mutual fund? They will see, for example, if you know about the stock market, you can easily understand the mutual funds. So they will create some fund. They will ask people to contribute some fund, and this fund will be invested in stock market. It can be invested in equities, it can be invested in government bonds, it can be invested anywhere. So what banks will do? They will ask customer to invest with them. Once we start investing that amount, they will tell you where they are going to invest the amount, whatever collected from us as a part of investment. So they will collect the amount and they invest that amount in different funds. That fund will be invested in different, stocks. It can be on equity, it can be on government bonds, it can be on index, it can be anything. So they go and invest. And once they get the profit, out of that profit, they will distribute something to us. So you invest, here you don't get the interest. What do you get? You get some profit percentage. So whatever profit these bankers are getting out of the funds being invested, some portion of the profit will be given to us. Those funds are called mutual funds. Those funds are called mutual funds. And they will also distribute health insurance or vehicle insurance, all insurance facilities, general insurance. So they give all the insurance facilities also. So if you want to take health insurance, you can go to one of these HDFC, for example. Go to HDFC. They have HDFC Ergo, right? You go there. You can buy your vehicle insurance. You can buy your scooter insurance. You can buy your car insurance. You can buy your health insurance. You can insure your home loan as well. There are many insurance facilities are provided by the HDFC Bank. Not only HDFC. I'm just taking an example of HDFC. So there are many banks provide these kind of insurance facilities to the people. They do treasury operations. What do you mean by treasury operations? If you want to transfer some fund from one account to other account or one place to other place, they will facilitate. They will provide that facility to transfer that amount from one person to other person. They will transfer this amount from one place to other place, one country to other country. So there are many services being provided. For all these services, what bankers does? They will charge something to. That is the income for bankers. So it's not that only interest amount bankers are going to get. Interest is the major income for them. Apart from the interest, they also does some sort of service activities, like they invest in mutual funds, they distribute health insurance, they distribute treasury, they do treasury activities, they do wealth management. What do you mean by wealth management? Wealth management is nothing but they will ask you to invest and they will put this amount in government bonds. And once they get some certain profit out of those bonds, they will distribute some portion to us. So they will do the wealth management for us. They will do treasury activities for us. Many services they provide, and all those services are being charged to us because they are providing service to us. Obviously, they go and charge this amount to us. Are you clear? So what are those facilities? What are those facilities they have they are providing to customers? I have explained to you now. Now, what are those different accounts we can open with the bank? See, first one is savings account. We open savings account with the banker. The savings account can be a salary account. Salary accounts are being separately seen nowadays, but savings salary account is also a savings account. Then you can open current account. You can open current account. There is something wrong with my pencil, guys. Just give me a minute. You can open current account. Basically, these current accounts are facility being given to the businessmen. because business people, they keep interacting with the bankers for several transactions on daily basis, right? They keep depositing, they keep withdrawing, so many transactions they do on daily basis. That is the reason current accounts is the preference, for the business people, because number of transactions will be, your transaction flow will be huge for business people. So for business people, they prefer current account. For salaried people, it is always, savings account will be a preference. We can have fixed deposit account. If you have money, you can go and deposit in, fixed deposit. The fixed deposits can be 1 year, 2 years, 10 years. You can go ahead and deposit these amounts. You get some interest. You have a recurring deposits, RD accounts. Recurring deposit accounts are basically monthly. If you want to save something, 2,000 rupees you wanted to save. So every month you go to bank and say, boss, I wanted to open a recurring deposit account. Recurring deposit, the name itself says recurring deposit. That means I keep depositing certain amount on monthly basis. So because the deposit is recurring, it is keep on happening, right? Month on month basis. So that is called recurring deposit. You go to bank and say, I want a recurring deposit account, RD. Can you please open for me? They will ask you how much amount you want to pay, sir, monthly. You can say it's 2,000 rupees per month I can pay. How many years you wanted to pay this recurring deposit? You can say 2 years or 3 years. So every year what they do, sorry, every month what they do, they will collect 2,000 rupees from you and put it in the recurring deposit. After completing the tenure of 2 years or 3 years, whatever be the period you decided, they will pay that amount, whatever amount you paid along with the interest. So that will be a savings for you. So you can create, RD account. You can also get overdraft facility. Overdraft facility. You can get overdraft facility. Overdraft facility is what? If you have 10,000 rupees amount in bank, you can withdraw only to the extent of 10,000. You can withdraw only to the extent of 10,000. But if the banker feels that your credibility is good, you are a good customer, they can allow you to draw more than your deposit amount. Your deposit is only 10,000, but they can allow you to draw more than your deposit. Whatever amount over and above the deposit you withdraw, that is called overdraft facility. So they will give you maybe 1 lakh overdraft facility. So 1 lakh overdraft facility, what does it mean? Do you have 1 lakh deposit in your bank account? No. You might have 10,000 rupees, but they would have given 1 lakh overdraft facility. So this 1 lakh, even though you do not have your fund available with the bank, you can go ahead and withdraw that amount from the bank. That is called overdraft facility. Right? So these are all the accounts available. You can open any of these accounts with the bank and you can start operating the transaction. Why we need to operate these transactions through bank? That is another important. See, for business people, what happens? They keep interacting with several people on day-to-day basis. Thousands of transactions keep happening. Lakhs and crores of rupees, dealings are happening in their business. They can't withdraw the amount and pay cash or collect cash, pay cash and collect cash. It is going to be very, very painful for them. So it is not an advisable thing to have all these cash transactions being happened between the people. And there is a legal requirement as well now. You are not supposed to have so many cash transactions. There is a limit. You cannot exceed beyond certain limit with cash transaction. So there is a legal requirement on cash transactions as well. So what business people does, so to avoid all these problems, to deal with several cash transactions, what they do, they keep routing all these transactions to the bank. So when they start routing through all these transactions through bank, it will be very transparent for them, even for the government, even for the legal, even for the tax department. It will be very, very transparent. when the transaction was paid, how the transaction amount was paid, to whom the transaction amount was paid. So it will be very transparent. So that is the reason why it is always better to maintain all these transactions through bank. So that is when people started opening accounts with the bank and start making payments or depositing amounts to the bank. When we start dealing with the banks with the so many transactions on day-to-day basis, there could be some mistakes happens. I might have recorded some transactions, bankers wouldn't have recorded. Bankers would have recorded some transactions, I wouldn't have recorded. So there could be some communication gap happens between our books of accounts versus bank books of accounts. That is when the bank reconciliation comes into the picture. Anyway, I will talk about bank reconciliation in detail later. Now, do you understand why banks are, why we need to open bank accounts? The simple reason is to have a transparency and better control among our day-to-day activities and facilitate so many people in terms of dealing with these transactions. It is always suggested to have transactions being routed through the banks. That is the reason business people, they always prefer to open bank accounts and start routing all these transactions through bank. Are you clear? Right. Okay. Now, what we need to understand is, we need to understand, apart from the services whatever we discussed previously, what are the other services banks can provide to their customers? So there are some lists given here. Let us discuss about these transactions. First one, the bank discounts promissory note or hundis. What do you mean by promissory note? Anyway, we have a separate chapter called bills. That time we will discuss about this promissory notes and bills, hundis separately. But let me tell you briefly what exactly we do. Suppose A and B, two people are there. B is in need of 1 lakh loan. What he will do is he will go to A and say, Mr. A, I am in badly need of 1 lakh loan. Can you please provide me this loan facility so that I can pay this amount in 1 month time? A said, yes, don't worry, B, I'm ready to pay this loan amount to you, but we have to have an agreement. We have to have an agreement. What is that agreement? They prepare one document saying that A prepares a document. He drafts saying that I am here with paying 1 lakh loan facility to B, right? And B agreed to pay this amount on so and so date or on the demand. Whenever I demand, B agreed to pay this amount. Then B will say, yes, I accept. I'll pay this amount to A on his demand, or I'll pay this amount to A or to the bearer of this document. Bearer of this document in the sense, whoever brings this document to me, I will pay this amount to them on demand or on the due date. I'll make the payment to them. So this document is called promissory note, because there is an agreement happened between A and B saying that, boss, I'm ready to pay this 1 lakh to you as a loan, but you have to sign a document which says this is the amount due from me, due for me, and you have to pay this amount on so and so date to the person, whoever brings this document to you or to me on the due date or on the demand. That document is called promissory note. The document is called promissory note. Once this promissory note is prepared, this will be signed by the people. So this document will be with A. He will keep this document. One copy might be given to B also. That's not a problem. But the document will be lying with A. What A does is he will go to B after 1 month and show this document and ask for that 1 lakh. Suppose if A needs this amount immediately. Today they wrote the document, and next day morning itself, A is in badly need of money. What he can do is he can go to bank. He can go to bank and say, Mr. Banker, I have one promissory note which says B is supposed to pay this 1 lakh on so and so date. Can you please allow me to discount this bill with you? Because I am in urgent need of money. Can you take this promissory note? Can you take this promissory note and give me the discount facility? Bankers will agree. What bankers will do, since they have a good business dealings with A, what bankers will do is, okay, no problem, A, you give me that 1 lakh promissory note, I will give you 95,000. I'm just giving an example. Why 95,000? 5,000 rupees is the benefit for a bank, because banker is paying this amount to A and banker can collect this 1 lakh from B only after 1 month. Why that facility has to be given to A? What is the benefit for banker? There is no benefit for the banker, right? So what banker does is, boss, I'm ready to pay. What you need to do is, you give me 1 lakh promissory note, I will give you 95,000. Then what banker do? On the due date, they will go to B with the document. They will go to B with this promissory note and show it to B and say, B, you said you are going to make this payment to me. So sorry, you said you are going to make this payment to A on so and so date. Can you please make this payment to me? Then banker B will make that 1 lakh payment to B. So banker will get 1 lakh. How much banker paid to A? 95,000. So that 5,000 rupees is the benefit or profit for banker. That is the reason banker will agree to do this kind of business. This business is called discounting of promissory. What is the benefit? The benefit is, I will explain in detail. We have so many journal entries, how to prepare the journal entries, all those things we are going to discuss in a separate chapter called bills receivable. That time we are going to talk about all promissory notes, hundis, what is bills receivable, what is payable, everything we are going to discuss. But right now, if you could understand to this extent, it is better. So banker will give these kind of facilities to their customers. You might ask me a question. Suppose if when banker goes to B and if B says, no, I cannot pay this amount, what will happen? Banker goes to A and hand over this promissory note to A and say, boss, you said you are going to, you said your B is going to make this payment to me after 1 month. When I approached B, B said, no, I don't have money. I can't pay this. Then I'm coming back to you. Please take this promissory note of 1 lakh and pay me back my 1 lakh amount. Then A is supposed to pay that 1 lakh to banker. A is supposed to pay that 1 lakh amount to banker. So this is how this bills discounting, transactions will happen. I don't want to explain beyond this. I don't want to create a confusion to all of you. So these kind of facilities are being provided by banker. Bill discounting facilities or promissory note discounting facilities are provided by the bankers. Why they provide this? Because they get some benefit out of it. They get some income out of that. So I already gave you an example how they will get an income out of it, right? Right. And they also allow overdraft facility to their good customers. I already told you about it. For example, if I have 10,000 rupees in deposit in bank, it doesn't mean that I can withdraw only 10,000 rupees. In normal circumstances, what will happen? Normal circumstances, you cannot withdraw beyond 10,000 rupees. Even 1 rupee you cannot withdraw. Even 1 rupee you cannot withdraw beyond 10,000. Why? Because your amount is having, you have 10,000 rupees in bank and you are allowed to draw only to the extent of 10,000. But there are cases where banker will say, hey customer, you don't worry. Even though you have 10,000 rupees amount with me, I'm ready to give you 1 lakh overdraft facility. Overdrawing facility. Overdrawing over and above my deposit amount. So you are allowed to draw more than whatever deposit amount you have is called overdraft facility. Right? So this 1 lakh overdraft facility, can everybody get 1 lakh overdraft facility? No. They don't give this overdraft facility to all the people. They will say take some security, collateral security. If you are a salaried employee, they will take pay slip. They will take some security measures while providing this overdraft facility. Similar way, they will give this overdraft facility to the business people by taking some collateral security. right? So whenever the overdraft facility is provided, what is the benefit for the banker? When they provide this overdraft facility, this is nothing but a loan. So whatever amount you withdraw, for example, 1 lakh overdraft facility is given to the customer, right? So let us say I have withdrawn 20,000 rupees out of this 1 lakh. So I will be charged to the extent of this 20,000 rupees interest. And they will also charge some overdraft charges. They will also charge some overdraft charges. Those overdraft charges you need to pay for them. So these are the benefits for them by providing the overdraft facility. So obviously, this is a one type of business model for the bankers, and they provide overdraft facility, and they will get some benefit out of it. Next, the bank gives loans to for a year or so to their customers. I already explained this. They will provide home loans, they will provide personal loans, they provide car loans, they provide gold loans, they provide scooter loans, they provide credit card loans. You name the loan, every loan is being given to the customers. So what is the benefit for the bankers by giving these loans? They will charge higher rate of interest. That higher rate of interest is income for bankers. So they will provide these kind of facilities also. The bank, on behalf of the customers, collects the amount of dividend warrants or interest on securities, etc. They will give some, they will provide some additional services. If you give standard instructions, hey banker, I always, whenever there is a dividend from Reliance Industries, please collect the dividend and credit to my account. Or this X person is supposed to pay interest amount to me on a monthly basis. Can you please go and collect this amount from X and credit to my account? You can give these kind of standard instructions to the bankers so that bankers can go and collect those amounts and credit to your accounts. Not only collecting amounts, you can also give standard instructions. For example, every month mobile bill you have to pay. You can give standard instructions to the banker saying that every month you pay my mobile bill to the Airtel services, or you pay my utility bills like power bill or water bill, whatever bills I have monthly basis, you pay this amount, standard amount to these utility people. So what banker does, they will automatically by month end, they will pick up some, they will collect some amount from your account and make the payment to these utility suppliers, right? These are all the standard instructions. What is the benefit for the bank? Banker will get some service charges. They will do some, they will charge something for us for providing these services, right? Those service charges are income to bankers. So they will provide these kind of services also. On instruction of the customers, the banker makes payment to the insurance premium, rent, etc. on the due dates. This is what I told you, right? It's not that only utility payments, they can pay rent amounts, they can pay insurance amounts, whatever standard instructions you are giving, they are going to make those payments on behalf of you to the respective departments, and they will charge you something for doing these services, right? Next, the bank sells and purchases shares, debentures, or government securities on behalf of its customers. Bankers does this also. You go to any bank for that matter, nowadays everybody has a demat facility, account facility. You can open one demat account with the State Bank of India. You can open one demat account with HDFC. You can open demat account with ICICI Bank. All these banks have their a demat account facility provided to their respective customers. What bankers will do, they will sell your whatever shares you have on behalf of you. They will buy shares on behalf of you. They will collect dividends on behalf of you. All these facilities are being provided. For that, bankers will charge some brokerage charges for us, right? Those brokerage charges are being debited to our account. So those are brokerage charges are income to the banker. So they provide these kind of services also to their respective customers. And money can be remitted to another place or persons through the bank at a lower cost. If you want to travel from one place to other place, and it is always not safe to carry the cash, right? So you can take one DD, or you can transfer this amount online. You can take traveler's check from one place to other place. You can go and produce the traveler check and get the cash from there. You don't require to carry the cash from one place to other place. Banker will facilitate you to bring that cash from one place to other place. They will give one traveler's check, they will give you one DD, or they will give all these online transfer facilities so that you can carry the amount from one place to other place without any hurdles. So that is the facility provided. For that facility, bankers will charge some amount and you need to pay for that. That is the income for bankers. The bank in turn for a consideration furnishes security or guarantee for its customers whose credit is good. Bankers also give guarantee to their customers. What kind of guarantee? Bank guarantees. For example, if you want to buy from one US one supplier, right? That you don't know who is that supplier. That supplier will not have any confidence on you whether you will make the payment to him on timely basis or not. For example, to get the goods from US to India, it might take 30 days for you to import the goods. Then that supplier will demand, saying that, boss, I'm ready to supply these goods, but what is the guarantee that after receiving the goods you are going to make the payment? Right? They will have their own doubts, right? That supplier might question you, saying that what is the guarantee that you are going to make the payment? Then this businessman will tell them, boss, don't worry about the payment. I'm giving you the bank guarantee. My banker is giving guarantee on behalf of me. In case if I am failed to pay, my banker will make the payment to your bank. So that is called bank guarantees. So these kind of bank guarantees are services are being provided. So banks, what they will do, they will take some security from this person and give guarantee to the suppliers in abroad or suppliers to the other states, other places, anywhere. I just took an example of foreign. It doesn't mean that every time you need, bankers will give bank guarantee facility only to the foreigners. No, it can be given to even local people. It can be given to anybody for that matter. Once the materials are received, what is the guarantee that this person is going to make the payment to the supplier? In case if that payment is not made, the supplier is going to be the impacting person. That is the reason what the suppliers will do. They will demand for bank guarantee. So the businessman will go to the banker and say, banker, can you please give guarantee to so and so supplier so that he can confidently send that material to me. That's a good facility. So that kind of facility is also provided by the bankers. The bank also issues letter of credit or traveler checks to facilitate commerce or travel. This I already discussed. One place to other place. If you want to, carry the cash, it is always not safe to carry the cash. You can carry traveler's check, you can carry DD, or you can carry in the form of online transfer. You can peacefully go there without having any security problems, right? So these kind of facilities are being provided. All these facilities are provided by the bankers by way of charging some charges to us. Those charges are income to the bankers. So this is how banks are being operated. In this introduction chapter, what I explained to you is banks, importance of banks majorly, right? What kind of services are being provided by the bankers, how bankers are going to get income out of it, right? What kind of accounts we can open with the bankers, right? How bankers are going to get benefit out of those accounts, what kind of loans provided by the bankers to the customers, and what is the benefit they are going to get out of those loans. All these things we learned. And next video we are going to discuss some more topics on bank reconciliation, and then we get into the actual topic. I hope you like the content. If you like the content, please like the video, subscribe to my channel, and share this video with our friends and colleagues. Thank you so much.